You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Bitcoin, Ether, Ripple, Litecoin, and more. Cryptocurrencies and other digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity. Provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments on everything from coins to tokens, futures, and even OTC options. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. Now it's time to dive into the exploding world of cryptocurrencies and digital assets. It's time for the Crypto Rundown.
All right, everybody. That music can mean only one thing. It's Monday. It's sometime around 2 p.m. Central, usually our starting time, give or take a bit, depending on who we have on the program with us. That means it's time for the Crypto Rundown. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from this fine network upon which you are hearing this fun program. If you're listening just to Crypto Rundown, I know we have a lot of new listeners all the time coming into this show, discovering, hey, we love you. B, there's a whole network out there waiting for you, so if you haven't leapt into those options-oriented wires, maybe you're just a crypto person, maybe you're a little bit scared. Well, we've got some great intro programs for you, like Options Playbook Radio and the Options Bootcamp. Those will help ease you in to those options waters, and you level up to something like the Option Blog and Volatility Views and the Advisor's Option, all the other good stuff, TWIFO, we have there on the network for you guys to sink your teeth into. So make sure if you haven't done so already, head on over, sign up for the full network, wherever you get this fine program, and leave a review for those folks out there who continue to discover the program. It always helps to have new folks coming on in, especially in these troubled times. Give them a little bit something to perhaps walk them off the ledge, help explain what's going on out there. The more the merrier, and of course, keep those questions, those comments coming. We do love to hear from you guys. And joining me on the old crypto program, joining me in the hot seat today, we've got an old friend of the program, even though he hasn't been on in a little bit. He is John Pearlstone from CryptoPatterns.net. John, welcome back to the Crypto Rundown program, sir. It has been too long.
It has indeed. Can you hear me okay?
Yeah, you sound great.
Awesome. Yep, well, thanks for having me. It's great to be back.
All right, and without further ado, then, let's dive right on into the Bitcoin breakdown.
It's time to explore the latest trading activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everybody. Like the man said, it is time for the Bitcoin Breakdown, the portion of the program where we break down what the heck is going on out there in Bitcoin land. You know, we have some interesting stuff afoot, kind of a couple of different opposing forces at work out there in the crypto and indeed the broad financial markets as well, but particularly in the crypto space right now, particularly when it comes to Bitcoin. Of course, everyone's been talking and looking forward ahead, of course, to this big halving event, which if you go to big sites like CoinDesk and others, they have countdowns just ticking down, waiting. Currently, we're at 29 days and 2 hours and 39 minutes to the big Bitcoin halving event on May 12th out there, listeners. But yet we have these other forces like the pandemic and everything else kind of wreaking havoc on the market. So as a result, we're seeing yet another down week here in the major digital asset, aka Bitcoin. We're down right around 420 odd from last handles from last program. Last week we were at pretty much exactly 7,200. This week, coming to showtime, we were at about a 67.76. It's given up about almost another 10 handles since then at 67.68 as of a few minutes ago. So not exactly the week, but perhaps the bulls wanted. Also, interesting things out there, seeing, of course, the broad equity markets rallying pretty hard last week. Saw gold getting a bit of a lift as well with all the virus-induced news out there and the dollar seeing the issues that it has. And yet, Bitcoin giving it up here this week, which is kind of interesting. Before you start getting into that any further, John, we'll start with you. It's been a little while since you've been on. So first, catch us up. What's been going on? What's been lighting up your tape over there in CryptoPatterns.net? And then what are your thoughts on this price action we've seen over the past week here, sir?
Well, I just hope you don't disconnect me because Bitcoin in my world is now the SPX. You go where the volatility is, and I mean, the stock market has given us all we can handle, obviously. But, the relationships, there's clearly something going on. And, Bitcoin was up, testing that key 9,500 level just a few short weeks ago. And now it's just, kind of traversing along, but which is a big range for almost any other asset, between 9,500 and 6,500. And, honestly, we've just become less and less reliant on the indicators and very much attuned to price and volume because honestly, the world has changed so much since I last talked to you. And there's this $6 trillion sitting in a stack, where they just want to decide how they want to deal with it. And Bitcoin was built for exactly this purpose, to stop the printing of money and create some sort of store of value. Yet, why aren't we at 100,000 on Bitcoin? Those are the questions we're asking. And the answers are coming. And it may be around that halving. It may be around some other things that I'll talk about later on in the show. But, it's to me, it's more of a coiling going on as opposed to, okay, we've got some technical analysis we want to provide on a certain pattern within this range. We don't see that as that valuable right now.
So all of this analysis right now, like we're looking here, a bunch of people going on about Fibonacci retracements down to 5,300 out there, and that's the short-term trend level for Bitcoin. You're not buying into any of that right now, it sounds like, John.
Well, I mean, I'll just give you a quick comparison with the stock market. I mean, the levels of overbought at the top were truly off the charts. I mean, it was just so, but it lasted forever, right? I mean, it kept going up and up and up. It was blow off top, obviously. And we were slowly shorting our way into it because those indicators mean something at some point. Well, these Fibonacci things are one side of the story. We tend to, I like the MACD. I think it's been really reliable in these, big volatility markets. And there's some big divergences that are very bullish for crypto right now. But, I wouldn't be loading up today. I mean, let the market tell you what's going to happen and then join the party is kind of our take on it. So short answer versus what I just said is you want to know what's going on in the indicators, but I wouldn't rely too heavily on them. Price pays. And right now we're watching price.
We've had a lot of guests of late over the course of the past month kind of come on the show and lay out what we've termed, for lack of a better word, the great disappointment that they have out there in Bitcoin and to a lesser degree other altcoin out there, because a lot of them were promised or indeed believed coming into this big sell-off that something like Bitcoin was supposed to be at the very least uncorrelated. Something I thought inversely correlated. I don't think there was a lot of argument for that, but there was some data behind the lack of correlation between Bitcoin and the broad market. Yet we saw when it all hit the fan in the depths of the sell-offs there in late February into March that, as we said many times on this network, correlation kind of went to one and everything sold off. So not just the S&P, but crude and gold and indeed Bitcoin. We had some days intraday swings of 30%. To the downside there, which, of course, brought up conversations about circuit breakers, which outraged everybody on the crypto side who said that's completely contrary to the entire ethos of crypto. But when you have 30% swings intraday, those conversations are going to come up. So I'm curious for you, John, what are your thoughts on the last couple of months and certainly the most recent price action out there in Bitcoin and how it's kind of, for the most part, I mean, even this week, again, we saw a little bit of a change of pace, but it's still off again over the past week. We're seeing equity markets broadly selling off again this week. Are you surprised at, in general, the degree of correlation we've seen with Bitcoin to the other major asset classes like equities?
I'm really not, and I can give you some very specific things that we've talked about. And in fact, I know you've got a question coming up that might go further, may cover it now. And that is that Bitcoin, the futures market was a great indicator for some time of where big moves in Bitcoin were going. And who's trading those Bitcoin futures? Hedge funds, algorithms, those quants, things like that. So Bitcoin was being traded a lot like a high volatility stock versus a store of value. We did notice that correlation with gold for some time, but then it just split off, and gold's been all over the place too, although it has been trending up. But when it dropped, what that told us when you saw the market crash and Bitcoin crash right with it is, it was part of hedge fund algorithms. That's our take on it, is it just was moving just like they were buying whatever you want to say, Apple, Netflix, whatever high flyers out there right now. Bitcoin was just another one. Now, that being said, I look at it like a teapot about to boil, meaning Bitcoin isn't Netflix and it isn't Apple, and it does have a real purpose out there that might become a use case that could matter a lot. And everybody knows it that follows this stuff, and everybody's watching it, and they're not going to give it to you when you expect it, period. I don't have to give you a bunch of technical analysis to give you that bottom line. You've been doing this long enough. It never moves when people think it's going to move. So for people to assume we're not going to see the reactions that should happen based on the fundamentals of what Bitcoin is, they're just early. That's all. That's our take on it.
Just a little bit ahead of the curve out there. Let's see how that curve is breaking down. By the way, I like that analysis of, it's just another asset in a lot of these hedge funds, which I think the recent price action, you could certainly make an argument for that. When it came time to liquidate and get that cash, it was yet another issue or another asset that was being liquidated out there along with everything else. Let's see what's lighting it up out here from an overall vol and volume and volatility perspective and open interest, all that fun stuff. These metrics coming to you, our friends over there in SKEW land, SKEW.com. Check them out if you want to kick the tires for yourselves. Let's get out to the realized vol first. This is the actual volatility that's been exhibited in the marketplace over the past 30 days, listeners. And it's kind of eerily unched for the past couple of weeks, which means Bitcoin's moving pretty much exactly enough to kind of maintain where we are right now from a vol perspective, because it was 200% last show. It's pretty much 200% again this show, up or down 1% or 2%. That's pretty much about it. So it's really effectively unchanged. Going out a year, same story. It's about 89%, so similar levels there. A little less surprising on the 1 year time frame than it is on the 30-day time frame, but still, realized vol across the board, pretty much unched. Implied vol, similar story. I've been saying for a while now, we're moving enough to maintain these vol levels, not really increase them a lot, not really decrease them, kind of just maintain them. That's pretty much what we're doing again. We're pretty much unched again, a couple percent difference. We were 89% 30-day implied last week. This week, 87%. Again, the implied, listeners, is, of course, the level of volatility that the market is pricing in from the options prices themselves, hence the term implied out there. Let's look at the volume on the major platforms, kicking it off with Deribit on the options front since our last show. It's been a pretty active time, actually. Pretty strong and pretty steady. Let's see. The big day was on the 7th, 57 million. The 6th, 56 million. We saw on the 9th, 47 million. And the 10th, 51 million. Today, so far, coming showtime, there was about 32 million. This is notional on the tape out here. So pretty active. It's not quite the heights we saw, over 80 million out there in the heights of the mid-March, but still decent action out there. In terms of the big prints out there in the options land on Deribit this past week, it's like a couple. Looks like one of the bigger ones might have been let's see. Yeah, actually, these are different days. So it looks like it might have been a vertical, but there are different days. We saw 350 of the April 9,000 calls going up on the 8th when Bitcoin was 73.13. They went up for 0.0117 of a Bitcoin. So work that out for yourselves. Then on the 9th, so it looks like someone was legging into a vertical, but it was a different day, so you can't really intuit that. Again, we don't have the sides for these listeners. 300 of the April 8,500, so upside calls order of the day this week when Bitcoin was at 72.80. Could be some overriding there. Could be trying to leg into a vertical if it's related paper. It could just be upside specking. Either way, that was done for 0.0055 Bitcoin out there. The big trades today, the big contracts that are really kind of lighting it up today. Again, not a ton lighting up, decent paper, not a ton. The big ones out in there, but the April 7,000 calls, which makes sense kind of given where we are right now, a little bit shy of that 7,000 level, about 240-odd, 230-odd handles out of the money here. Those are the big prints with about 325. And then we've got April 6,500 puts with 227. Those are the volume leaders. Let's talk at the SKEW a little bit, see what's going on from a SKEW perspective. The current SKEW is 12%. That's up quite a bit from last show, up from 5.2%. Again, that shows puts getting a little bit more firm out there, getting a little bit more active out there, which, again, we've seen a bit of a sell-off, not surprising. The call-to-put ratio is currently going the other way, though, up to 61% from 55% out there, which is kind of interesting as well. And let's go out to the open interest. Let's see here. Open interest, pretty strong across the major platforms. The number one venue still Deribit, 492 million worth of open interest. Number two, that race between LedgerX and OKEX continues neck and neck. LedgerX taking the top, number two spot, I should say now, with 32 million. OKEX right behind it with 30 million. Then we drop off a bit again. CME is 7.1 million. They're averaging about 7.6 million, so a little bit shy of their average. Their max OI out there, 11 million. And then rounding out the bottom there is BAKKT with a whopping 52,000 worth of OI. Again, this is on the options front. Looking at the OI, where it's centered right now, the big month is June. So the end of quarter seems to be the hot time. We saw it in D, saw it again in March, seen again in June. Now, end of quarters seems to be where a lot of the OI tends to aggregate in the overall Bitcoin options, with 29,500 across all the major platforms there expiring in June. Then April is second biggest with about 22,900. So some coming off the board at the end of this month, but the lion's share going to come off the board in the end of June. Going out to CME land on the options front. Today, actually, one of the busier days in a while. There was, coming to showtime, almost 900,000 worth of notional going up, which, again, not a ton, but I mean, looking at CME, other days are well shy of 200, 300,000. That's actually a decent amount. We have to go back to the height of the frenzy back in mid-March to see notional going up over close to 1.5 million a few days. But that's the biggest spikes we've seen of late. Today, one of the bigger ones since then. I haven't had a chance to dig it. I'll have to go look and see exactly what's printing out there in CME land. But the rest of the week was pretty quiet. But speaking of CME, overall on the futures front, CME and BAKKT, the kind of story has been kind of a whole heck of a lot of nothing for the most part on the futures front. Looking at the volume over here, the ADV at CME dropped about over 50% actually. 242 million in March. It was nearly 500 million in February. So on the futures front, the volume coming off quite a bit. BAKKT, similar story. Their volume, or I should say their ADV fell by about nearly 40% in March. Is 26, almost 27 million down from, I should say 16.5 million down from almost 27 million in March here. So interesting stuff across the board. Open interest in March dropping as well, and CME land, they hit an all-time high, 338 million. That was back on Valentine's Day. That was the hot day for them. And ever since then, it's kind of been trending downwards, down now to 127 million. BAKKT OI is down to 4.6 million since hitting its high, also on February 14th, of about 19 million. So not a lot lighting it up. This week, similar story today, about 6,000 contracts on the tape, and CME coming into today's show. That's kind of one of the higher volume days. Thursday, we saw only 3,000 contracts on the tape, so not a lot last week. The 6th was the other big day with about 11,000 contracts on the tape. And our old friend, the BAKKT volume bot, looking out here this week, seeing what's lighting it up on BAKKT this week. And let's see, so far on the monthly futures this week, 50 million total volume. That's up actually 16% this week. And the max OI is 6.4 million, which is effectively unched from where we were this time last week. John, I know you like to watch the futures quite a bit as well. You talked about them quite a few times on the show in the past. What are your thoughts on what we've been seeing out there from a futures price action perspective? And also, I'm curious if you have any thoughts. A lot of the listeners have been asking us about what's going on with the volume out there on the CME, particularly on the futures side. So if you have any thoughts on that, sir, have at it.
I do. I'll stand by my hedge fund theories in terms of, the big flush, and now it's kind of just sitting there not doing much, and you covered a lot of it. But there was a ton of volume at the highs, the recent highs, the 14,000, not the 20,000. There was quite a bit of volume back then too, but there really weren't futures. So, our take on it is kind of like high volume candles tend to get retested. We continue to have a bullish edge in our planning and our thinking, but the general message I make in my notes for today's, show, and dry powder, it really is. You're guessing at this point, where the big moves are coming. Volume should be a great indicator when they come. Everybody's going to want to run in or run out, right? Depending which way they want to lean. So I just want to, you want that base position so you don't get left out of the bullish edge if it happens, but you want plenty of dry powder to react to things too. That's what the futures are telling us because they're very indifferent at the moment, and that makes zero sense, right? You have one of the most volatile stock markets of all time, and now the most volatile market I've ever seen, crypto isn't. There's a divergence for you, right?
Yeah, that is somewhat strange. That's kind of what we've been highlighting that on the show in the past, just the notion that we are seeing a lot of volatility out there and yet not the commensurate volume to go along with it. Because you think if there were times, and we'll get more into this, we have a listener question about this, we'll get into this in a little bit, but there are obviously other extenuating circumstances out there, lack of liquidity, issues with market makers, wide spreads, that sort of thing. But in general, they are interesting times. Speaking of interesting times, we got one of the WINKLEVOSS out here. I'm not sure which one. This was Cameron WINKLEVOSS, who, of course, is one of the people who run Gemini, also a big Bitcoin bull, obviously, because he owns quite a bit of it, coming out here and kind of addressing what we were talking about earlier in the show here, this quote-unquote great disappointment people have had out there in Bitcoin, coming out here and saying, this pandemic, as he terms it, is going to be a historic inflection point for Bitcoin and the metaverse. I'm not sure what he means for the metaverse, but for Bitcoin as well. He's also entreating everyone out there to hold onto their Bitcoin, which you probably would expect given the fact that he owns quite a bit of it. So he's talking his book a little bit here. And he also implies that Bitcoin's public profile will undergo a metamorphosis under the current conditions. Even though, as we said on the top of the show here, Bitcoin's still kind of moving, not quite in lockstep anymore, but still moving alongside the more traditional markets out there, which is kind of interesting. I don't know, John, this is partly a guy talking up his book here, which isn't that surprising, but a lot of people were hoping that an event like this would deliver exactly what he's talking about, that this pandemic would illustrate the need for, and indeed the use case for, a quote-unquote uncorrelated asset like Bitcoin, as well as, trying to liberate us from things like the Fed and inflation and printing money, all the traditional things that the economy has been locked to. The crypto space is attempting to try to deliver us from that with this decentralized type assets. And so a lot of people were hoping for that sort of inflection point. We haven't quite seen it yet. I'm curious, John, what are your thoughts here on one of the WINKLEVOSS saying this might be it?
Well, like a lot of other things I've seen come and go, I think he's right. But I'll phrase it, he's wrong till he's right. Right? I mean, I think that the use case is laid out beautifully. I think people are aware of Bitcoin. I've been working with you on this show off and on for a year or so, and they still don't have good access to buy Bitcoin for the mainstream investor. And that seems to be, you want to talk about an inflection point, make this available in an ETF, make this available, tradable on Fidelity's platform, and then tell me we might not see more activity. But what we've been saying that kind of tells you where we're at on it right now is you buy Bitcoin at 3,000 or 30,000, because either way it's going to be a good buy. At some point it's going to have its day. It's never been my favorite crypto. I like some of the altcoins better because they have former Bitcoin developers are a lot further developed as actual uses for currency. But everybody knows Bitcoin, and Bitcoin will be the one to own when the time comes. So right or wrong, we think there's a big move coming. Doesn't mean it's not going to go up, down, sideways, this and that before they finally show their hand. And that's just trading. I mean, you see that almost any time somebody's. I'll wrap up my input on it that I think that the volatility coming in the crypto market will make the stock market look kind of tame when they finally decide it's time to do it.
Interesting. And you know what else is interesting, listeners, is the altcoin universe. So let's get to it.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, everybody, welcome to the altcoin universe, where we attempt to break out from the gravitational pull of Bitcoin and talk about some other coins and digital assets that are lighting up our tape out there. Let's start by breaking down the top 10 out there, market cap wise. Again, like I said before, take these overall market cap numbers with a big, healthy dose of salt, but I think the rankings are still pretty reliable out there. Number one, of course, Still the old BTC at about 124 billion right now, so off where it was last week, obviously. Number 2, good old ETH, 17 billion. It was over 18 billion last show. XRP at about 8.2 billion out there, holding firm at number 3. Number 4, Tether, about 6.3 billion. Number 5, Bitcoin Cash at right about 4 billion. Number 6, Bitcoin SV, 3.4 billion. Number 7, Litecoin, a far cry from its old halving days there, 2.6 billion. Number 8, Binance Coin, 2.3 billion. Number 9, EOS, 2.2, and rounding out the top 10, the old Tezos there, about 1.3 billion out there. Let's hop on into, before I start breaking down these various complexes and their vol and stuff like that. John, I know you guys watch a lot of altcoin. You've said in the past that kind of Bitcoin is what drives a lot of the other altcoin, and what works for that applies to others. I'm curious, what are your thoughts on what we're seeing out there in the altcoin universe right now? And are there any particular assets out there that are lighting up your tape?
The two-part answer. One is that nothing has been able to show anything significant as far as, a true different direction than Bitcoin. It still runs the show. At least that's what we see. There may be some small coin I'm missing, but not in the ones that we cover in this show. But I think it'll be very meaningful. I'm definitely watching the altcoin market very carefully, because if and when we get the volatility in Bitcoin, what happened the last time, what was it, 2016 or 17, whatever that last massive spike was, Bitcoin took off, and then the altcoins did have different rates, and you could start to, it was a great trading opportunity where some held back and then took off later. We haven't seen any of that yet. I'm just putting that out there for your listeners that altcoins will have their day if and when Bitcoin has its day. And we absolutely believe this time it won't be across the board. You need to be in the right ones. These top 10 are a good starting point, but you're just going to have to see the charts when this all happens as to who's really buying what.
Yeah, let's break down some of these top 5 coins, see what's lighting it up out here. Let's start with ETH, obviously a robust number 2, not just in overall market cap, listeners, but also in options market size and volume and liquidity out there. ETH down nearly 10 handles from last show, about 981. Coming to showtime is at about a 154 and change. It was north of 164 last show, so closing in on 10 handles to the dark side. ETH, again, these metrics coming from our friends over there in SKEW land. 30-day realized, similar story to what we saw earlier, unched at about 245%. 30-day implied, up a little bit. It was 102% last week. This week, up to 109%. So either way you parse it, still pretty volatile, still pretty frothy out there. The ADV is ticking down again. Even though we have a decent volume week on our hands, overall the ADV is down to about 2.3 million. It was 2.8 million on our last show. It was north of 5, I believe, or close to 5 not too long ago out there in the height of the madness in March. So we're seeing a decent volume week, though, notwithstanding that ADV creeping down. The busiest day was on the 7th, 3.8 million. Coming into showtime, it's got a decent paper closing in on a little bit, right about 2 million worth of notional on the tape as of coming into showtime. So right about close to, pretty much in line with the ADV. It looks like they're going to beat it a little bit today. But the busiest day, again, going back to the 7th. Overall SKEW up a bit. It was 2.3% last show. Now it's 7.4%. So again, showing puts kind of moving into the 4 there as well. Overall OI, let's look and see here. It was about 37 million worth of notional outstanding right now. That puts it, let's see, right about the average is a little bit more than the average. The average is about 33 million, so a little bit north of that. The max we've seen is 46 million, so a little bit away from that, but not a ton. So decent volume, decent OI out there, even though the ADV has been trending down a little bit of late. John, when people come to CryptoPatterns, is there one altcoin they're looking for in particular that really kind of drives the paper? Is it just ETH because of the market cap, or is there something else that really is driving their attention these days?
I think ETH definitely gets the most focus because massive developer community, and they keep claiming they're developing ways to get this thing usable. They haven't seen it happen yet. You may or may not be aware, EOS, which I've mentioned in a few shows, they actually did put a beta out on their user community. It's essentially a Facebook social media site, but it could evolve into things where you use their currency, buy, sell, get paid. Instead of Facebook getting the advertising, you get the money when people click on your stuff, things like that. Very interesting. And in action, it's called Voice. Voice.com, I believe they paid something on the order of $30 million for that site name, which may or may not have been a great investment, but they did that. And anyway, it's up and running, and you can check it out. It's one of the first real active user communities where the average investor can go on and see how things operate. You can't really tell the difference, but it's all done on a crypto as opposed to the standard internet. So that's kind of those are the two. I mean, Ethan. Only EOS only because they have literal news. I mean, they're really doing something. How far and how fast that's going to go is anybody's guess, but it is really happening.
That kind of reminds me of the old .com bubble days, John, when companies had 30 million to blow on a domain, on a URL out there. So maybe that's
the parallels are 100. A very good point. It's absolutely true. I mean, when this is all going to go and who's going to be the AOL, who's going to be the Google, that's all to be determined.
Yeah, and who's the pets.com? No one wants to be that one out. If you're blowing 30 million on a URL, maybe that's a good argument for the latter. But hey, sounds like it's interesting. We mentioned it's still there firmly in our top 10. You like what EOS is up to? Let us know. You guys are not shy of sharing your opinions. And we like to hear about what altcoin are lighting up your tape out there. Bitcoin Cash. And we'll get to Ripple first before we get to Bitcoin Cash. Ripple kind of down slightly on the week here, not a ton. It was threatening 20 to the upside. Now it's about 18 and a half or so out there cent-wise. So off not quite a full cent, but pretty close to it. So not a great week, but not as bad as we've seen in the past out there. Bitcoin Cash down a little over 33 handles. And Bitcoin SV rounding out the top 5 here, down almost 5 handles from where it was this time last show. All right, you guys got questions? We've hopefully got answers as we head on into your crypto questions.
You've got questions about crypto. Who doesn't? It's time to find out the answers to your crypto questions.
All right, everybody. Welcome to the Crypto Questions, a portion of the show where you guys take the reins, your questions, your comments, your insights. You know how to hit us up at Options on most of the major social media platforms. You can use the website feedback form. You can use our email, just questions at theoptionsinsider.com. It's baked into our app and everything else there, too. No shortage of ways for you guys to reach out to us, just like Charlie did here. And John, whenever we get these technical ones, we usually try to put them on the burner for when you can come on the show because they're right up your alley. So this one came from Charlie, and he wrote in to know, what is the most important technical indicator for Bitcoin? And I know, John, talking technical guys, they all have their own recipe, right? They all have their own poison that they prefer. Some like RSI, you mentioned your MACD, or they all have their different weapons in their arsenal that they prefer. So I'm curious, and it sounds like Charlie is, and probably a lot of our other listeners are too. What are your preferred weapons in your arsenal for Bitcoin these days, sir?
All right. Mention the MACD. I think moving averages in general, or just, you got to figure out the time frame that most accurately, gives you the picture of what's happening in the market. But playing with moving averages is usually pretty valuable, and very much so now with these big swings. But in the end, right now, I'm going back to where I started. I think volume, and we can talk about how there's very little volume right now, but that's saying something too, right? I mean, people are watching. We're all sitting at home. Everybody's watching this market. And if nobody's buying or selling, that's telling you something. So I'd be watching the volume numbers first and foremost as an indicator for Bitcoin. And then secondarily, moving averages. I feel like all those, the MACD and RSI, I mean, to me, that just gives you an indicator of when things are overbought or oversold. So I'm even more focused on the particular moving averages and how they line up. Are they about to cross? Things like that.
Well, speaking of volume, that leads very well into our second question. I like the handle here. Lucha T. Sounds like he's a Mexican wrestling fan. Maybe he likes Nacho Libre. Either way, I like the handle. Lucha T wants to know, why are we seeing such light crypto volume right now? This is the question we've all kind of been asking ourselves. And obviously, we look at it from a broad derivatives perspective. So I'll start there. I'll let John dive in on the overall volume front as well, because I'm sure he sounds like he has some thoughts on that as well. But it has been interesting. We've been parsing this for a while. We're seeing this on the futures. The volume pretty light. The OI was remaining firm. Now we're seeing the OI starting to come in as well. So in the past, light volume, but staying strong or steady OI usually meant people were kind of just holding on to their positions. Now they're not really trading a lot, and it seems like they're closing out some of their OI. Some of it also rolled off the board, too, and is not being replaced. There's just not enough volume to really come back in there and replace this. It's kind of a bit of a mix of both. And on the options front, we're seeing similar things. Look, I said today was a decent day out there on the CME front, but still decent. It's still less than 1 million notional. Deribit was doing a decent amount of paper, pretty strong, actually, in the height of the chaos out there, which was good to see. People were turning to Bitcoin options and doing some decent paper. That has since come off. I think we're seeing reflected in Bitcoin, even more so written at large, what we're seeing in the broad overall options and derivatives markets, which is vol is high. It's come off quite a bit, but it's still fairly elevated compared to where we were, let's say, 2 months ago. And at the same time, also, not so much in the Bitcoin front, but it has been in the traditional markets that we're seeing everyone pretty much playing electronically now. There's no such thing as a trading floor anymore. There never really was for Bitcoin, but still firms that had that presence. That's gone away now. So liquidity providers are in somewhat unprecedented waters. They're dealing with a very high volatility asset to begin with. So in general, you're going to see spreads kind of widen out a little bit. You're going to see less displayed size on those bids and offers. Is what we're seeing in the broad traditional equity options market. We're seeing that similar thing play out in the crypto space. It's just a natural function of the markets. When things are this volatile, when things are this crazy, when things are this uncertain, liquidity providers can't just stand in there and show you their best hand, super tight markets. They have to widen out a little bit just for their own safety. It doesn't mean they won't fill you, perhaps, if you try to get in. You have to work it a little bit. You have to get a little bit more aggressive on how you trade these days. But in general, that lack of displayed size and widening out is also playing a factor out there, at least from what we're looking at from the options and from the futures front. John, it sounds like volume is a huge driver of what you guys do over there. What are your thoughts in general on maybe some of the reasons we're seeing this effectively bit of a drying up out there from an overall crypto volume perspective?
I mean, to me, I definitely tend to favor simple explanations, and it's like you can get all the action you need in very liquid markets right now. Why? I just don't know that many people that exclusively trade crypto. So when you're looking at, 50 handle moves on, a 30-minute chart on the S&P futures, I don't know why I got to be worried about Bitcoin at that point. So I think that explains a good chunk of it. And then in addition, I think there's a bit of posturing going on right now by people who really want in or out of Bitcoin. We don't know which way this is going first, but volatility is common. Markets are cyclical, and it's just, we had a big high volume period when things reached that cycle high recently. It's coming back. I mean, to me, they want you to look away. That's kind of what I'm always thinking. When they go this light, Bitcoin only knows how to move in dramatic numbers. It's coming.
I think it's a bit of sleight of hand, huh? Look over there while we have the big move happen behind your back over there. That's kind of interesting.
I think people will wake up. Look, that happened when it shot from, I think it was 900 at the beginning of the year, 20,000 by the end of the year. I mean, once it starts moving, volume shows up. And that's what's going to happen here again, I'm pretty sure.
I think there's something to be said, too, for what you said about the traditional markets giving people pretty much all they can handle right now. If you're just long the S&P, you had a very tremendously volatile, head-scratching, sleepless month. You didn't need to go looking for volatility elsewhere. I think there is something to be said for that as well. These days, vol still coming in, but, VIX still a frothy around a 50, showing we're still pretty elevated out there. Things are still pretty backward out there in a lot of those products. So there's still kind of crazy times out there. And when it's still crazy times, maybe you don't need to go searching for crazy asset classes out there. Not that crypto is crazy, but in general, the levels of vol it can deliver sometimes can be pretty crazy. So perhaps some folks not needing that added vol touch. And of course, the great disappointment, the correlation we've seen, probably also dispiriting a few folks out there. We got some love coming here from SPLASHOUT. I just like that handle too. SPLASHOUT says, great program. I tune in every Monday. Thumbs up. Well, thank you, SPLASHOUT, and everyone else who sent in and keep sending in that love. We love you guys right back. You guys are quite literally the reason that we do this show. So keep tuning in. We love you. Keep sending those questions, those comments. We love to hear from you guys. Let's round it out here with a question from the creatively named Small. Small wants to know, do you think this virus will cause some of the smaller crypto exchanges to go out of business? Well, this might be where I kind of agree with Cameron Winklevoss there, that this could be an inflection point for some of those kind of newer players, their volume somewhat de minimis. They're trying to get their feet under them. It was already a very crowded marketplace to begin with. So we knew there was going to be some sort of eventually consolidation, some of these smaller players going away, ceding their market share to the larger players. We haven't seen a ton of that yet, which is a little bit surprising. I think maybe if this continues, we will see more. But certainly this is a bit of a stressor that perhaps they didn't need. Now, if it came alongside with commensurate volume that they could then turn around and use to drive their platform, that would be a good thing. We did see a spark of that again in March, but right now we're still seeing pretty high volatility and not a lot of volume to go along with it. So they're getting all the downside, not enough of the upside that they need to keep these platforms going. I've said many times, volatility is one of those things, like a dessert. It's good in small doses. You get a ton of it, and all of a sudden it can become too much. And we've been at pretty frothy volume and volatility levels for quite some time. And look, the realized vol 200% in some of these crypto assets out here and not budging. That's very volatile. And yet we haven't seen the volume that these exchanges need to drive their transaction fees to keep people going. And also is scaring away potential end users, particularly in the retail space, who may be a little intimidated now to come on in and open an account when all this stuff is moving like crazy. So these aren't the best of waters for these exchanges, these small venues, these small brokers to be playing in. So it certainly is a challenge. So it wouldn't surprise me. That said, we haven't seen a huge rash of them yet. So maybe perhaps that is a good sign. John, we have to say here for our listener Small, who wants to know, do you think this period of extended, protracted volatility is going to drive some of the smaller players out of the game?
You covered a lot of the things I would have said, but I'll add something. Usually you give me a second to wrap up my thinking, so I'll just share my final thought because it ties in, and that is, I'll answer the question saying, yes, I think there's going to be some consolidation and elimination of smaller players, but not necessarily for the reasons of the coronavirus or anything like that. There's just the bigger players are starting to come into the game, and one people might want to look into. I read that Toronto Stock Exchange just started trading a Bitcoin fund of some sort. I don't know the details. You might want to search that. But that's going to increase, interest, and people might do their investing that way. And then Overstock. Have you covered this in any prior shows? Overstock has become kind of a crypto company.
Yeah, they pivoted pretty much completely into crypto now.
Right, and so they were able to get their digital dividend approved last week or a couple weeks ago, whatever it was, and they've got a record date on April 27th. It's a 10% dividend. Really creative idea. Whether it's going to work or not, only God knows, but it's definitely going to generate some attention, and that is they're giving you 10% of anything you own on April 27th, but on a crypto exchange that they own called T0. And that will obviously then offer you the chance to trade crypto on what will essentially be one of the WINKLEVOSS owns one, but a regulated exchange. So I think that's good. And they're going to have, I think they said that 80,000 investors. So they'll all be getting some form of dividend, and introduce those people, however many are not in crypto already, introduce them to the crypto community. So you mentioned the halving. This one catches my attention as a potential awakening for some crypto volatility, because just news, if nothing else, right? It's something different, and it's something fairly significant, and they've been able to get the approval from NASDAQ. So there's some things worth watching there.
Unfortunately, that music means we're going to have to leave it there. Thank all of you out there for sending in your questions, for your comments, for joining us live. Keep it coming, downloading after the fact. We love you folks too. Keep it coming. But before we go, John, if folks are intrigued, they want to learn more about what you guys are up to over there at CryptoPatterns.net. Obviously, they need to go to CryptoPatterns.net, but what will they find when they get there, sir?
We offer a subscriber newsletter, and they're welcome to join up, and we keep everybody informed. We do real-time updates if things get active, so try to get that information to you in a timely fashion when you can actually use it for your trading or investing.
And if folks want to find you on the old Twitters or social media, sir, where should they go? What should they do?
That's at CryptoPatterns. Find us on Twitter.
There you go, at CryptoPatterns. And for the mothership, CryptoPatterns.net. And on behalf of John and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for sending in your questions, listening live. Keep all that fun stuff coming. We'll be back to you later this week with a lot more great content, so stay tuned for that. Otherwise, we'll see you back here next Monday for more of the Crypto Rundown.